For years, I've been moving cash out of US banks and out of the US dollar. I sold my US real estate a long time ago, and I told you should consider doing the same things. But the one thing I'm just now getting around to doing is selling off most of my US stocks. I'm going to clear up a common misconception why you might not want to do this. I'm going to tell you the reasons why, and I'm going to tell you how. Let's start with the misconception, and that's asset protection. You can own U.S. stocks in brokerage accounts all over the world, whether it's in your own name, in a company, in a trust structure. You can move those U.S. stocks out of the U.S. If your issue is, hey, I don't want my assets sitting in the U.S., I want them diversified, then you can do that any number of ways, including opening a bank account in countries all around the world. Ironically, Americans have the hardest time doing that. Conversely, you can have a U.S. brokerage account that holds foreign stocks, and those wouldn't be protected in the U.S. So pretty simple, asset protection is a different issue. Now, if you'd like us to talk more about asset protection, leave a comment below asset protection so we know you want to hear about it. If you'd like us to help you protect your assets and set up brokerage accounts and companies and bank accounts all over the world, go to nomadcapitalist.com/apply. Let's get into the reasons why I am selling off most of my U.S. stocks. I already have sold off a number of them. The first reason is geopolitical, what I've been telling you for years. Multi-polarity is going to become a thing. We're talking about this at Nomad Capitalist Live this year with experts from all around the world who are going to tell you our countries in Africa, in Asia, in South America, even in Europe, want to do less business, want to be less reliant on the United States. And so not only all the chaos that's happening right now in the stock markets from talk of tariffs and everything that's going on, but I've told you for years there's a longer game, which is the EU is going and doing deals with South American countries now because they want to be able to bypass the U.S. for some of the stuff they need. Brazil, the stock market has been on a roll lately because of increased trade with China, things like agriculture, soybeans, beef. They are becoming a supplier of choice. And what you're seeing is companies around the world are going to be able to do business with other countries, except, I believe, American companies. And so this idea of buy the S&P 500, just buy U.S. stocks, they have global exposure. We're not seeing that so much. And I'll give you an example of that later. I believe all these new alliances happening around the world, you are going to see growth in other stocks, in other countries, more than this historical trend where the U.S. just exports everything to the rest of the world. Number two is currency risk. The dollar's down, as I'm sitting here, almost 10% against other currencies this year. And so if you're looking to diversify into other currencies, if you believe the dollar is heading in the wrong direction, there's talk of an emerging markets boom like we haven't seen in about the last decade. I'd like to hold some of those currencies, not just some of the other larger fiat currencies. The euro's done very well, for example. The Swiss franc has done well. But they're talking about currencies like the Malaysian ringgit doing very well. And so if I can own stocks in those places, I may be able to out-earn what I would earn just putting my money in the bank there, for example. And so I can get bank accounts that let me hold euros, or I can go and get a Malaysian residence permit and get a bank account where I can hold Malaysian ringgit. Actually, we're going to have our banker from Malaysia come and hopefully help some people out this year at Nomad Capitalist Live with Malaysian bank accounts. But what I like about the Malaysian bank account is you can then buy Malaysian stocks and you're going to earn a higher dividend. Those dividends are going to be tax-free. I'll come back to that in a minute. And I get to hold the currency and benefit from any appreciation. I've done that with term deposits, but I'm putting more focus into doing it with stocks. And so Mexican peso, I bought stuff in Mexico towards the end of last year, about a month and a half after Trump got elected. Not a big position, but just kept averaging into the stocks. And so the peso got beaten up a little bit, and the stocks have been beaten up from the election of the new president there and then Trump. And I said, I will live in Mexico. And so it's better than the currency, it's better than the stocks. And both have risen since then. And so it's a nice 1-2 punch to benefit from a currency rising. Now, currencies can also fall. My bet in the long term is the US dollar underperforms other currencies. Number three, what I mentioned, higher yields. I went through my yield portfolio and found the US stocks are really dragging me down. My opinion as an entrepreneur, you can take it or not. I'm certainly not an investment advisor, but what I've done for myself is said I'm going to have a part of my portfolio that is yield based. It does not have to be fast growing. I want cash flow because that allows me to say, I'll take the growth stock, which is my business. I'll reinvest that money. I don't need to take a big chunk of cash from my business to live. And I'm also not going to starve myself to where I have some kind of poverty mindset, which isn't good for running the business. Let me take a chunk of cash, invest that for yield, spend that money, not the business's money. And it was the U.S. stocks. I mean, AT&T, for example, was once a high-flying dividend stock. They cut the dividend a couple of years ago, and then the stock came tumbling down. It's now recovered, but the dividend, as a result, for someone like me who is not a U.S. taxpayer, I'm paying 30% on about a 4% dividend. So 2.8% is one of the better ones. Stocks like JP Morgan Chase got under 2%. IBM did really well. And so stocks in the last couple of years in the U.S. Have done well. I think that that's coming to an end, which is kind of the last reason why I thought I'll just get it at the top. But by those stocks getting up, yields came down. And so I'm getting 1-2% yield on those remaining stocks. Is that I can replace those. I'll tell you how in a minute. The fourth reason is, quite frankly, I just decided to break from all of my investor friends who said, oh, you got to buy this U.S. stock, you got to buy that U.S. stock. And I realized I run my finances differently than a lot of people do. Again, I optimize my business to grow. And I have a part of my portfolio, which is the first part of the portfolio that I really built out and perfected, which is it just pays me cash. And a lot of other investors don't understand that. They're swinging for the fences. And I talked to a friend of mine. He said, I got up to $6 million, and then I had some weird stock in there. I was very overweight on it, and now I'm down to $3.5 million. I never want to count on getting rich twice, as Charlie Munger says. And so the idea of swinging for the fences, I realized how that's not for me. And I probably shouldn't be listening to people who talk that way. And I think that that's a key element of anything that you do in your nomad capitalist pursuits, is realizing the average person's not going to understand you. They don't understand why you need a second passport or a third passport. They don't understand why you might want to move overseas. They don't understand why you just don't want to pay 40% income tax where you live. We help our clients avoid all those fates. You can go to nomadcapitalist.com/apply and learn. One of the things that I've taught our team to do is look at the human angle. A lot of clients who come to us, they're the only people that they know who want to diversify internationally, who believe the U.S. or their other Western country is heading in the wrong direction. And we get that, and we understand that in a human way. I don't think there's enough humanity in this industry. I think it's too much focused only on strategy. What's the best passport for the money? What's the best bank account? No. It needs to feel right. That's what we help clients do. I had JP Morgan Chase. Stock did great. Yield got down to very little. I said, how long is Jamie Dimon going to be around to keep growing this thing? Listen, maybe I'll be wrong, but there's plenty of great banks. This is our business. I know banks all around the world. I've worked with banks, and I've told you, I've had experiences with good banks in Singapore, good banks in Georgia. And I followed, again, the Peter Lynch model and said, I know this bank. I have a good experience with this company. I'm going to buy this. If you look at the Georgian banks, they've almost doubled in the last year, and you had that healthier yield, tax-friendly yield. I believe, again, don't take this as investment advice. I believe that those banks have more room to grow, even though my focus owning bank stocks isn't entirely growth. So you simply replace that. Another thing that I did is a lot of people own foreign stocks through U.S. structures. So, for example, I have a bank in South America, and I was able to talk to a brokerage account that I had, not even to own stocks there, but in Colombia, when you buy property, you can move your money in as a foreigner to convert it in a brokerage account at a favorable rate. They could give you a really good service, much better than a bank would, and then you pay your bills, and they kind of handle the whole process for you. And I talked and I said, hey, I recently sold a home in Colombia. Moved the money to buy a new home in from somewhere else, sold the home, got the proceeds in Colombia, and said, hey, is there something I can do with this? I said, yeah, we have stocks and shares, and they have things like utility companies. So I did not do this, but one of the things I sold in the U.S. was I sold a utility company, one of the best utility companies in the U.S. Again, yield went down. It seemed kind of toppy. Analyst recommendations were becoming more of a hold than a buy. And they said, oh, well, yeah, we've got an electric company here. They pay, really high yield. It's been a consistent slow growth stock. I didn't go after that one, but I said, okay, the bank, can I hold that stock here? Yeah. It's listed on the New York Stock Exchange, but we also have it listed here on our local stock exchange in one of the South American markets. And so why would I want to go on a very high yielding bank stock that, again, I wouldn't buy if I didn't spend time in South America and know, okay, I think this bank has some potential. Why would I want to pay the US 30% of that for the privilege of listing on their stock market when I have a brokerage account locally? Same thing with some of the US ETFs. So some people own like EWW, the Mexican stocks ETF. You can own, even in some US brokerage accounts, Mexican stocks. Just look at the holdings, buy the ones you want directly. I decided I always had the Mexican stocks that I liked directly in my brokerage account. But one that's still harder is Brazil, EWZ. I was in Brazil, and I can see why the stock market has not grown as much. There is some sense of inefficiency that I just pick up on being there. However, I believe geopolitically there's some potential there. I also believe in Brazil, incredible dividend paying stocks because of Brazil's rules in terms of how dividends have to be paid out. And at least for now, they're tax free. So why would I want to own an ETF in the US where not only do I have to hold stocks that I may not want as part of a broader index, but I'm paying 30% tax to the US for stocks that aren't even in their country? Now, this is one of the harder ones because most brokerage accounts don't let you hold Brazilian stocks. And so there's one or two brokerages that I found, as well as you might have to go to Brazil and set up an account directly. But you can get out of ETFs and ADRs. So the bottom line is I am going to keep a few US stocks. There's just some that you can't replicate somewhere else. There's some that I like. But even things like NASDAQ indexes, go and get a bank account somewhere overseas. They have plenty of funds that have, NVIDIA, those kinds of stocks in there. What you need to accomplish this is brokerage accounts overseas that offer access to more markets, potentially priority or private banks that offer access to different stock markets or different funds that you can replicate. And what you most need is you need to be able to actually know what the good stocks are overseas, ideally because you're living this lifestyle, if not because you simply follow it, as I do. One reason we host Nomad Capitalist Live, our live event overseas, is that you'll come and you'll realize, wow, Malaysia, where we're hosting the event this year, this functions pretty well. And oh my goodness, that banker, he seems really on the ball. And oh, this and that. We're bringing together not only the banker from Malaysia, we've got a banker from Georgia coming. We've got investment experts from pretty much every continent coming to Nomad Capitalist Live this year, all in Kuala Lumpur, Malaysia, and you're going to get to experience what it's like to, or potentially you can start getting comfortable selling off your own US or Western stocks and buying stocks in these up and coming markets that pay the higher dividends, have the better taxes, potentially could grow more in a multipolar world. That's really why I've decided to get out of US stocks. It's the last bastion of US wealth that I have. I left the country long ago and with most of my assets. Now I'm getting rid of most of the rest.